Good afternoon. So Lepidico is an ASX-listed lithium development company with a market cap of around $120 million. We're looking at developing a vertically integrated business from mine through concentration to lithium chemical production. As some of you probably aware, last month we announced a business combination with TSXV-listed Desert Lion Energy, and Desert Lion has a number of lithium mica deposits in Namibia and Southwest Africa. The two companies are highly complementary. Desert Lion brings those upstream deposits into the picture, and Lepidico has a number of process technologies that allows us to produce either lithium carbonate or lithium hydroxide. The merger with Desert Lion is a plan of arrangement based on 5.4 Lepidico shares for every one Desert Lion share. And along with that transaction, we also announced a capital raising, a 1-for-9 entitlements offer to raise just under $11 million, which closed last week, and the funds from that should be in tomorrow. So to give you an understanding of our asset overview, our registered office is in Perth in Western Australia, where we have our technical capability. The picture you see at the bottom of the slide there is actually of a pilot plant that is currently in commissioning. To the left of that, you can see the Rubicon deposit, Desert Lion's African or Namibian project. And I'll cover off on that in a bit more detail in a minute. And above that, we've also got an ore offtake arrangement with a Portuguese private company called Grupo Mota over an operating lepidolite mine called Alvaroche in northern Portugal. The downstream part of all of this in the feasibility study that we're currently undertaking is a chemical plant which uses our proprietary process called Lmax. The feasibility study is based on that plant being built in Sudbury in Canada. The main reason for that is there are two large nickel smelters there that collectively produce around 1 million tonnes of sulfuric acid a year, and our process is reasonably acid intensive. Last month we also announced an MOU with a chemical company called Gulf Fluor, based in Abu Dhabi. They are the largest sulfuric acid producer in the region. And they currently produce a series of chemical products, including aluminium fluoride, that they sell into the aluminium industry. That MOU with Gulf Fluor envisages that we will build our chemical plant on their site, so there's no logistics to be able to get sulfuric acid into our plant. And they will provide the site and also the acid. They will also assist in marketing of our byproducts locally. So just to give you a bit of a snapshot on the transactions that we announced last month, on the left-hand side is the timetable for the entitlements offer, and you can see there that new shares will be quoted tomorrow on the 6th of June. So that is effectively complete, and it was a very successful capital raising. So we were aiming to raise 10.8 million, and we took some over subscriptions and pulled in just over 11 million. On the right-hand side, you can see the timetable for the business combination with Desert Lion. That transaction was announced on the 7th of May. The shareholder meeting is scheduled for the 27th of June, and we envisaged that transaction should close probably somewhere around the 10th of July. So a quick overview of Desert Lion. They have a large ground position in Namibia, just north of Windhoek, and outside of the town of Karabib. The stars that you can see there, the yellow stars and the two red stars, are all pegmatite occurrences. The blue area and the northern part of that blue area is where the two resources are at Rubicon and the series of Helicon deposits. And importantly, there's about 68 square kilometres there which is under mining licence. So last year Desert Lion secured a 10-year licence that covers all of these deposits that you can see here. And from a Lepidico perspective, the importance of this is that it means that the permits and approvals through to production for the mine and the concentrator have largely been mitigated. So there's resources here in indicated and inferred category of nearly 9 million tonnes at about 0.5% lithium. Once this transaction closes, we envisage that we'll be getting on the ground and quite aggressively drilling these deposits out with the objective of having a measured and indicated resource that we can then pull into our feasibility study. So focusing in on Lepidico, this is a schematic of what we envisage a vertically integrated business will look like. A mine providing ore to a concentrator. There is some potential for byproduct feldspar in Portugal, and then shipping a lepidolite concentrate to the Lmax chemical plant, which doesn't just produce a lithium chemical, it can also produce a silica product, which can be sold as a construction material, SOP fertilizer. Part of the funds that we're raising right now will also be directed towards an R&D program for further product development. And our waste product also has potential applications for landfill remediation. That being the case, we could have a zero waste chemical plant. Quickly on the Alvaroche mine in Portugal, Lepidico has an ore offtake arrangement with the owner and operator Grupo Motta. What you can see here, these two open pits cover about 1 kilometre of strike. We've drilled out about 500 to 600 metres of the southern part of that and have about 5.8 million tonnes at around 0.9% lithium in resource. We're working on our first reserve estimate here, and that should be available in the third quarter. And we had a very successful drill program here last year where we nearly tripled the tonnes in resource, and there's still potential for further additions. Focusing on our process technologies, the main one is Lmax. It's currently under provisional patent application. It is solely, or its purpose is to treat lepidolites, invaldite ore, and ambligonites, so lithium, mica, and phosphate minerals. It uses ubiquitous reagents in processing, so sulfuric acid, limestone, lime. It uses relatively standard equipment in leach reactors, filters, and crystallisers and evaporators. What's novel about it and makes it patentable is some fairly elegant chemistry. So importantly, it operates at atmospheric pressure. Maximum temperature we use is just over 100 degrees Celsius. And as we remove various impurities, we also generate a series of byproducts that you can see there. We've also added to our technology suite the Lmax process, which is LOH, the OH for hydroxide, which was announced to the market earlier on this year. So just to outline Lmax, it's another hydro-metallurgical process. The reason why we sought that process was it doesn't produce byproduct sodium sulphate like most sulfur-based lithium processing chemistries. So we saw a risk in trying to sell or have revenue from sodium sulphate. So we were seeking a process that could produce lithium hydroxide without that. That's what Lmax achieves. So I mentioned earlier, we've got a pilot plant that we have built in Western Australia. This is in the commissioning phase now. We funded it last year in September, and we brought this into production within budget. It cost us about $2.6 million to build, and it was on schedule. So I think Strategic Metallurgy that have built that plant and will be operating it have done a fantastic job. The plant operates at about 15 kilos an hour, capable of producing around 1 tonne of lithium carbonate a month. We'll start production this month. And then in September, we'll be looking to convert the plant over into low-max functionality so that it can produce lithium hydroxide. Scale up from the pilot plant to our phase 1 plant is around 480 times, with that phase 1 plant being capable of producing around 5,500 tonnes a year of lithium hydroxide. Here's a few photographs of the pilot plant from late April. And just to round out on the phase 1 plant, so this is the plant that's nearly 500 times bigger than that pilot plant. Lycopodium out of Perth has completed engineering on lithium carbonate capability for this facility. They are just about to start a re-engineering process for production of lithium hydroxide. That engineering will be complete in about 4 to 5 months' time. And the feasibility study integrating this with the upstream components of mine and concentrator is expected to be completed probably late in the first quarter next year, in the March quarter. This plant will be, the final engineering for this plant will be based on the plant being either built in Abu Dhabi on the Gulf Lures site or in Sudbury. But the important point there is both of those locations give us proximity to markets for our byproducts. So in summary, Lepidico's strategy here is to fast-track the business to free cash generation, demonstrate the commercial viability of our process technologies, Lmax and LOH-Max, and become a vertically integrated producer of lithium chemicals. Thank you. Any questions?
Any questions? Great, thank you very much, Joe. Thank you.